Okay, g'day, Rudy here. Welcome to the midweek gold video update. I'll go through the big and small producers. Are you having these conversations at home? Please, babe, take some profit. No, I'm buying more. Wonder, is that happening? Let me know. Okay, so USD gold. So we still keep making higher uptrends. If we go to a daily chart, you can't say that's a bearish looking chart. We are approaching my short-term target here, which is this flagpole distance added to the breakout. But I thought I'd do something a bit special today. So this is a 6 monthly price chart of gold. Yeah, it looks pretty horizontal when you squeeze it up like that, doesn't it? But what I've just done then is change it to a log chart. So log chart isn't like nominal values, it takes percentage moves, so makes the older time frames look more realistic. So we're doing another projection here. So if we take the flagpole from here to here and add it to the breakout zone, we get a target of 8,200. Okay, so I reckon that's what you got to keep your eye on the ball. So that's a realistic target to go for. Alright, just to get you all excited. Okay, so I reckon so if you're in it in gold, that's what you can try and trade it, but I think you just got to hang on. Alright, so enough of that. Ready? Get on with it. Okay, so Aussie dollar gold still looks good. The juicy fat profit margin. Yeah, I've got to remember. So this is our gold miners. They cost ASC, cost of production down here. So this is what's going to, each time they report their quarterly, people are going to go, oh geez, look at those profits, look at that cash coming in. Because really it's only been, I guess, since the beginning of the year, because you know they're quarterly, these lag, like these prices here, probably, so in the next quarterly results, they'll start coming through. Maybe we'll start getting some believers and not the, oh, you buy gold stocks for day trade, mate. Okay. Now, went over this last time. This is the famous 60-40 portfolio that all the big banks tell their clients to do: 60% equities, 40% bonds. Now, this is gold over their famous portfolio. So you can see, really, well, since 2021, it's been outperforming it. And I did mention in the last vid, not that one, and it was questioned, where'd you get that figure from? Well, here it is from Reuters. Morgan Stanley CIO favours 60-20-20 portfolio strategy with gold as inflation hedge. Anyway, so that's that's where I got it from, 60-20-20, from the old 60-40. So the big banks are sort of waking up because their clients are sort of going, what's this gold thing all about? Funny, I hope people do understand that gold was real money before. You couldn't issue paper money without being backed by gold, and they stopped that. That's why gold's running now, because there's too much money being printed. Anyway, the Dow Jones over the gold. So gold is Well, once it breaks here, then it's all over for the, well, gold's going to outperform the share market. It's a given. Okay, onto the stocks, really. Okay, so this is GDX in America. So we've taken out all-time highs, as we should, because gold's a lot higher. GDX over gold. Still a long way to catch up to the gold price. Isn't it interesting how you've actually made more money just if you had invested in gold in 2009, you would have made more money than investing in a gold miner, and that's only sort of now reversing in the last couple of months. So if all you're doing is holding gold, well, you switch a little bit into the miners, I reckon. It's just not personal advice. So this is GDX. GDX in Australia. Another interesting stat for you. All the global gold miners market, if you add them all up, 700 billion, and just the company Oracle is 800 billion. And Northern Star and Evolution are included in this GDX. And this is my preferred one, miners, because it's hedged. You don't have to worry about the Aussie dollar going up. Basically the same combo. The miners ratio over GDX. So as the Aussie dollar goes up, the miners will perform better than GDX. My preferred play is over in America, the GDXJ. It's got all these guys, these Australian miners in them. The ratio of GDXJ over GDX. So a bit like gold outperforming, so gold miners outperforming gold, I expect the juniors to outperform the seniors, which is why I like GDXJ. Okay, alright. So if we look at the big boys in GDX, so we've got Newmont. So you can see it's finally taking out its highs. Wheaton, royalty company, just you don't get much better bullish looking chart than that, on all that, finishing at their highs. Agnico, Barrick, so Barrick's had a bit of a wobble, so it's just coming down. This is good. It's good to come back and have a rest, then go again. Anglo Gold. So there's no signs of like Kinross. Unbelievable, really. Okay, so onto the Aussies. So the XGD. So this is our gold miners index, all put together. So a solid run from the index. Okay, in alphabetical order. So Alkane. So Alkane is it's really hard to get people to say when do you buy. I mean, the best time to buy is when all these green arrows were put in. If you're a long time subscriber, you would have got them. But the reason I'm stalling on this one is because if you're going to buy Alkane, you probably, like around these levels, is probably as good a time as you're going to get. It's a good story. Anyway, too much time, Rudy. Because when you, like you see, you say Black Cat, that's fine. It's just consolidating there. Mr. Net Zero, he's out of the naughty cupboard. So we'll see there. That was only not so long ago. Who said to buy. I know one person did get in. So that's looking good. It's a good project. They were just digging in the wrong place and focusing on net zero. Capricorn, giddy up. Catalyst. So it's another one of these stories. You know, you want to buy during consolidation phases. Evolution up. Emerald, that was one not so long ago. You'll see that consolidation, 3 weeks. Focus, that's a giddy up one. I missed this one, I must admit. Apologies. But it's cheap. I actually had them in there as a developer. No one pulled me up on it. You serious gold producing people. I think 100,000 ounce production for 300 mil market cap. It should be like $1 billion. Anyway, go do your own research. Greatland Resources. So this is a big boy, 4 billion market cap, 250,000 ounces. So he's not cheap, but neither is Northern Star. Genesis. That looks fine. Geez, Swati Cap, hey? Look at this one. Kingsgate. Silj is actually my favourite ETF on earth. The silver miners. KCN's actually in Silj. When I had a look the other day. Anyway, they're now 1 billion market cap, so they're probably at fair value now. Northern Star, the king, he'll just keep. Any fund manager who wants to buy gold stock, they're just going to buy Northern Star because they don't know any better. I've been watching this one. So Northern Star over the CBA, eh? Forming that's a very bullish pattern once broken. 1, 2, 3, 4th time lucky. Last time, switch a CBA for Northern Star, they pay the same dividend. Okay, OBM. Okay, so there's another one that did this consolidation. That's probably not too late to buy. Pantoro. So Pantoro is going for its highs. Anyway, it's going up. Perseus. So that's fine, consolidating. Remelius, that just wants to go on with it, that one. Regis, so reaching all-time highs. So you can see it's just stalling there, having a few weeks through these candles. Resolute, eh? Giddy up. Well, that's the thing with this thing, it's extremely undervalued. 300,000 ounces for 1.7 billion. It's just the African. So it's a shame, really, isn't it? This, if they were in Australia, it'd be double the price. I think the same must go for this St. Barbara. So they're trying to get up to 228,000 ounces and a market cap of $500 million. So they're really cheap too. Volt. So Volt's doing one of those consolidations. So if you wanted to think if you're ever going to buy Volt, you'd have to be buying it now. Not personal advice. WAF is still. And look at that Westgold. Giddy up, eh? Well done if you're holding that. Okay, so now to our smaller producers. This is another one I was not so long ago saying you could buy. Small producer. 45 mil market cap, 30,000. So that's anyway. Beacon. So 25k production to 30 mil market cap. Not cheap, but Horizon. Beautiful. That was another one not so long ago. Said to buy. What are they targeting? 100,000 per ounces at 215 mil. It's pretty cheap. Kaiser. They're targeting 25,000 ounces, 150 market cap. And buy on consolidations, they say. Mecca, hey? Going up. So they just started mining, 70k per annum, 700 mil, so they're sort of fair value. NMG, 40,000 ounces for 350 market cap, so they're sort of about fair value, but you can see they've been much higher before. Anyway, consolidating. SVG. Oh yeah, this is I think they're just restarting gold production. Savannah Gold in North Queensland. 35. This is the first time. This is a new addition. It's got the blue star. 35 mil market cap. No, that's pretty cheap. Heard it here first. And then lastly, Vertex. So they're 20k per annum, 90 mil market cap. So they're still pretty cheap. Not the most you'd love. Well, these are things I don't think you're going to get opportunities like this anymore, where they come down and then break. All right, that's the Gold Producers wrap for you. All right, see ya.